Hey guys, how's it going? Value Venture Investing here today. So, Tesla, it's been the news as of lately, and if you woke up today, you were a little bit surprised to see that Tesla, yes, they are diluting current shareholders. They are issuing more shares. And if you take a look at Tesla as of late, I mean, this year alone, it's up over 92% this year. I mean, we saw this huge run up as of late. I described that in my last video and why I actually sold. I sold at 900 because I thought at those prices is a bit undervalued. But if you want to see that video, I'll put a link right there. In terms of the stock price today, taking a look here, initially when this news came out, it was actually down, which, technically speaking, if you're diluting a company, you're losing ownership shares. Technically the stock should be down, but this stock doesn't actually really care about too much, and it seems to be taken as positive news as of recording this. It was over $800 per share. It's all over the place here, but it's definitely rallied as the day has went on. I was actually quite surprised that this is held in as good as it has. Like I got out at a good point. I got out at 900, but I thought it might come back quite a bit. Now we're seeing it around 800, 800, somewhere around there. So it's actually held on pretty well. So I'm pretty surprised about that, and that might have something to do with what Tesla did today. So let's take a look at the article right now. This was actually released today, February 13, 2020. Tesla announces offering of common stock. Tesla today announced that it intends to offer approximately $2 billion of common stock in an underwritten, registered public offering. Tesla has also granted the underwriters a 30-day option to purchase up to approximately $300 million of additional common stock. So that's an option right there as well that might come into effect. Elon Musk, Tesla CEO, will participate by purchasing up to 10 million of common stock in this offering. In addition, Larry Ellison, a member of Tesla's board of directors, will purchase up to 1 million of common stock. Of course, those aren't huge positions for those guys, but it's nice to see that they are on board purchasing, and Tesla, or Elon rather, has done this many times in the past. The aggregate gross proceeds of the offering, assuming full exercise by the underwriters of their option to purchase the additional securities, would be approximately $2.3 billion before discounts and expenses. Tesla intends to use the net proceeds from offering to further strengthen its balance sheet as well as for general corporate purposes. And of course, Goldman Sachs and Morgan Stanley are going to be the lead underwriters in this offering as well. So about $2 billion. When I heard this news, I was a little bit perplexed. So I think the best way to look at this in terms of whether it's a positive or a negative is to look at the bull case, meaning what is, people that are bullish on the company, the positive outcomes of this, and the bear case. Okay, so let's start with the bull case. I know a lot of my viewers are really quite bullish on the company, and I become more bullish on the company. Of course, not at these prices, but we'll start with the bull case. Now, first off, the price is very high right now. So it would make sense for them to issue an offering, because when they're offering, they're getting money, right? So if the price is, if you guys don't know this, if the price is 400, right, and you do 100 million shares, you're only going to get 100 million times 400. But if the price is at 800, 100 million, obviously, you're going to get a lot more money in terms of net proceeds. And that can cause a little bit less of dilution, right? Because say you have a target in mind of $2 billion, whatever it may be, now your number of shares that you actually have to issue or that you have to do in a secondary offering is less, so it creates less dilution. So in this case, looking at it from the bull case scenario, it's about 1.5% dilution, so it's not a huge dilution, and they should take advantage of this dramatic share price increase. And of course, a lot of analysts and a lot of people that are following Tesla were saying that they should do that, because Elon, during the conference call on the last earnings, basically said we're kind of self-funding going forward. We're not going to dilute. And this is, I'm going to come into this why I think this is potentially a negative thing. But some people saw that as a negative. They said, well, why not take advantage of that, right? So obviously they changed their mind for whatever reasons. We're going to get into that further into this video. But that's definitely a positive. Another positive is it's not that much money, right? So the question is, why is it this amount? This might be do something with the uncertainty in terms of the coronavirus with Tesla's China factory. Of course, the news broke today that there's a lot more confirmed cases, but if you look into that a little bit further, it's actually because they're changing the reporting standards of how they actually are reporting people who have a confirmed case. We won't get into that. But perhaps this is just a little bit of an insurance policy or something. We don't know how this is going to be affecting the China factory in Shanghai, of course. We don't know how it's going to be affecting China's or Tesla's supply chain. So to have an opportune price of being able to get, a significant amount of money in terms of, most companies over 2 billion potentially, could be a good time when the price is so high. So it's kind of like, could be good for that, right? Also, this is something that can really prove that they're really focused on aggressive capital expenditures. Of course, we all know that they are aggressively, CapEx is going up, and they're essentially, they're really pushing new product categories. We have the Model Y that's going to go into production soon, the Tesla, or the Semi, the Roadster, right? So this could prove that, they're putting their money where their mouth is. They might need a little bit more cash than they think. And of course, that's something that I've always said, they're going to need a lot of cash. The last bull case that I can see is the fact that Elon's going to be taking a stake. Larry, they're both on board. They're putting their money where their mouth is, and this is a sign of confidence in the company. And I think this is potentially one of the reasons that the stock is actually up today, right? Elon does this quite often. He puts his money where his mouth is. And if they hadn't bought in at these levels, right, people might say, well, the stock's pretty high right now and Elon's not buying in, right? So there's not a lot of money in terms of them, their net worth and such, but they're putting their money where their mouth is. So I think those are some pretty valid bull case reasons for this offering. So now let's look at the bear case, because you guys know I'm also very dubious of the company. I have a lot of concerns as well. So another reason why, in terms of, we're talking about the bear case here now, why only $2 billion, and why are they doing it now when they said that they wouldn't? This might be a sign that the company thinks the stock is a little bit overvalued. They might think that they might not have an opportunity to get this kind of bang for their buck going, in terms of what I explained here, going into the future. They may think that the company is overvalued, and so that's why they're only doing $2 billion, is because they just want to kind of squeeze a little bit of money out of it while they can, because they said that they wouldn't do this, but they think the stock is extremely overvalued, so why not? So that is potentially a bear case scenario. Talking about China again, this one's kind of almost a double-edged sword. You could say that it's a bullish thing or it's a bearish thing, but maybe there's a little bit more that we don't know about in terms of production issues in Shanghai. This has been very secretive from the Chinese government. This is something I think going forward, not just talking about Tesla itself, but the stock market as a whole, this could be a significant issue going forward, because there's so much uncertainty about this, and this is still developing, and I don't think that the market is really taking it as serious as it should. Of course, long term it's not going to be an issue, but short term there could be a lot more issues than what we might actually know, right? Another thing is, we've seen Tesla become profitable here. We've seen Elon say, well, we're basically self-funding, we're having a positive operating cash flow, stuff like that. This could be a sign in the bear case that they're going to continue to dilute even when they are actually profitable. We had that phenomenal quarter last. I did a video on this one as well, and they're still diluting, right? So this was one of my initial concerns, and I made in one of my videos a long time ago, is that I'm saying this is going to be a huge capital expenditure, what they're doing, like over time, and they just keep adding more products and such, right? So this could be a sign that they are going to continue to dilute, even when things are good, and when things are bad, they're going to be diluting even more. And the last bear case scenario, well, it's not a bear case scenario, but one of the bearish outlooks on this news is that maybe you just can't trust what they say, and that's the biggest issue for me with this. Okay, if you're in a conference call and someone asks you, you're an aggressively expanding company, we know you've had a great quarter, but are you going to be diluting shareholders in the future? Are you going to be issuing more shares? And you say, no, we're not. I really don't think we need to do that. And then you turn around and you do it. It's just like talking to someone in your own life. When they say they're going to do something, they should do it. When they don't say they're going to do something, then they shouldn't do it, right? So why would Elon take that? I mean, this is kind of typical of him going outside of what the board says and perhaps what the company as a whole thinks is best for it. But if you're a little bit uncertain, maybe say something like, we really don't think that we will, but it's certainly possible going forward in the future because there's a lot of uncertainties. Anything's possible. So if you can't trust what Elon's saying, what the company's saying, that puts you in a very bad situation when you don't know what you can trust going forward and what are they going to fulfill if they say they're going to fulfill. And we know we've had issues with this in the past in terms of production being late and stuff like that. So if you guys are wondering my thoughts on this, I take a little bit of both sides. I think it's both a positive and a negative. How much of each, I don't know. I'll let you guys know. Let you guys make up that decision. But I think in terms of bang for the buck, because I sold my shares at 900, I think it's the right thing to do because they are going to need a lot of cash. Why not take advantage of it right now? But in terms of the biggest negative, him saying that and not sticking to his word, for me, is the biggest issue that I see with this, and I really don't like that. So, curious what you guys think. I know a lot of you, my viewers, are super bullish on the company, so maybe tell me what your thoughts are on that. Do you think it's a good thing? What do you think specifically about him changing his tune? What do you think is behind that? And also China. Do you think that that's going to be a significant issue going forward? So don't forget to like the video, guys. Subscribe. Really helps the channel out. And that's going to be it for today, and I'll see you in the next one.